It is the only way to start your day, tuning in from across the country in Nairobi, wherever you're tuned in from, 94.4, Mombasa 87.9, and we are on 96.0 in Nakuru, 96.7 in Eldoret, 90.9 in Nyeri, 102.5 in Kisumu, 97.7 in Malindi. Our live streams are up on Spice FM KE on Twitter and YouTube, and soon to be back on Facebook. We're starting off this second hour of the show at about 6 minutes past 7 o'clock. Ndoko, Siti Muga, and our guest host for the week, Wanjru Gikonyo, going through matters with you. And today we're asking that big question: is Kenya going the Greece way, looking at the IMF package? But as we start off this hour, let's begin with Siti, the proverb.
For tomorrow belongs to the people who prepare for it today.
For tomorrow
belongs to the people who prepare for it today.
For tomorrow belongs to the people who prepare for it today. Even as now we're starting that conversation, it sounds like you can just segue from that proverb right into it.
I can see you're driving me in that direction. Yes, have we prepared well for our future as a, what are we? Is it a lower middle income economy? This is where this administration wanted to take us.
You know what Citi wants to say? Third world banana republic.
Middle income country, this one.
Lower middle income.
No, lower income, yes.
No, you see the objectives or the target, the economic target of this administration and part of the justification for the large infrastructure and the borrowing is this is the direction we are going. We are being classed among the frontier economies and whatever that means. So in other words, we were moving from small leagues to the bigger leagues. And the plan was to get us there.
Okay.
So looking at the proverb, have we laid the right groundwork for success in the future? And I think that's what we're talking about today. The quest of the administration to take us into this higher income or higher development status has come at a very high cost. The cost, the size of the economy, according to the president and according to the statistics, has grown. The president touted this as one of the successes during his Madaraka Day speech. The economy has grown twofold, from 4.7 trillion in 2013 to 10.3 trillion today, and that's supposed to be a good thing. GDP growth, again, is another thing that the president talked about. But obviously there's been a concern. Kenyans aren't feeling the growth. And then with the IMF coming into the picture, the real fear that this heralds the beginning of a very difficult period. Could we be going the Greece way? So today we'd like to understand what exactly happened in Greece. Is the IMF going to take us the Greece way? What are the things we need to do to get out of the debt crisis? And really just understand the role of monetary policy in the resolution of debt.
All right, and to help us understand that a little bit more and to just go into the details of it, we're speaking this morning with Dr. Stephen Githae Njaramba, who is a Kenyatta University lecturer, public policy and macroeconomic specialist as well. Good morning, Dr. Njaramba.
How are you doing?
Very well. How are you?
I'm well.
Karibu sana. Thank you for joining us in the Situation Room this morning. Siti Muga here with you, and Ndu Okoa as well, myself, and of course Wanjru Gikonyo, having this conversation. And even as we get right into it, the question is Kenya going the Greece way? Perhaps we need to understand a little bit more what exactly happened in Greece, and are we seeing steps in that direction here as well?
Yes. Thank you for the question. I hope I'm audible from your end.
Yes, you're audible, sir.
Yeah. Okay. Fine. We're looking at the situation when it comes to Greece and probably how Kenya is compared to that. Greece, in terms of the economic situation, currently, and I don't know how. Should I? I'm hearing myself from your side.
We can hear you, and you're fine so far.
There's a lot of echo on my side.
There's an echo on your side?
Yeah. But my point is that the Greece actually had some fundamental issues, even before the intervention by the IMF. And looking at some of the issues that we can cite, one of it was the poor fiscal policy and implementations. That actually made the economy to be unsustainable in several of its programs. And due to that, there was quite high borrowing because of the situation at that particular time. We can actually divide Greece into three sections. That is, I think, before 1975, when it operated under authoritarian rule. Then we have 1975 up to around 1998 during its financial crisis, and after when it joined now became the member of European Union up to current. So we can have three sections. The second section, I guess that was where the major economic issues occurred. And if we look at some of the fundamental underlying concern, one of it was that the economy experienced very high levels of unemployment. At one point, it hit almost 80%. We had a lot of tax avoidance. Most of the companies and individuals were able to avoid paying tax because of a lot of public sector bureaucracies. We had also a lot of what we may call economic uncompetitiveness. The Greece itself depended heavily on foreign production. We can also cite some of the fiscal concern. One of it was the unsustainable fiscal policies based on the fact that a lot of spending was on social programs. That is, it was not generally investment, but concern was on transfer payments. We can relate transfer programs or transfer payments to what we may call social investment. Social investment in the sense that they have no return in the long run, but it is just exhaustful expenditure on the side of government budgeting. So generally, those were the main issues. And because of that, the government ran into heavy debts in Greece. And in 1998, I think there was a call for the rescue. And IMF came into place, and of course the European Union, with several conditions, which along the way I don't think they were much able to help the Greece, but in a way it was able to survive for a longer period. So I think that was fundamentally the issue when it comes to Greece. And comparing that to Kenya, from my side, I don't see much difference. Yes.
Not much difference. I was about to say not much similarity. I thought in terms of employment, okay, we've got high unemployment, maybe 40%, especially because of COVID, maybe a bit higher. Tax avoidance, KRA is making sure everybody pays. In fact, they are almost moving into people's offices, even though now possibly people will start doing double books, hiding, evading because of the coercive nature. this economic uncompetitiveness, Kenya is more diversified in terms of our economy. Dependency on foreign production, that one I don't know, I can't say. Unsustainable fiscal policy, ours may be unsustainable because of big projects. Theirs was because of transfer payments. So maybe slight differences, more resilience, better management, comparatively better management in Kenya. Maybe the situation is different. Maybe the remedies of the IMF might be the same or different. I don't know.
Now, for tax avoidance, that one I agree with you completely. I think Kenya, we are more on tax burden rather than avoidance. But in terms of competitiveness, we look at the concept of competitiveness from a situation where you consume what you produce. Mainly, the generation of income is within. But a situation where what you produce cannot even get into the market domestically. Rather, you depend heavily on imports and reducing and dwindling exportations. Then you are completely uncompetitive. So we are looking. So if you look at that particular time in Greece before the crisis, the current account, that the difference between export and import was almost going to negative the size of GDP in Greece. If you look at Kenya's scenario, that is almost what we are having. We do not even manage to consume even toothpicks that we are producing in Kenya. I doubt nowadays we are producing. And the moment you are not consuming what you are producing, then along the way, in the long run, the production will stop. The producer will stop or relocate into other countries. That's the concept of uncompetitiveness. So we cannot say that Kenya is actually similar to Greece scenario, that is before crisis, and therefore we still run into debt.
But Dr. Njaramba, if I may just intervene here, one of the things that Greece was actually was said about the Greek government was that they involved in protectionism, meaning the whole thinking was that they wanted to spur the economic activity within their own country. But alongside this was heavy government spending on policies that actually did the complete opposite of what they're trying to do. So if you look at our heavy spending on infrastructure, which we call development projects, I see similarity there. But what I also see is that Greece also focused on many welfare projects to their people. Now, these necessarily didn't bolster the economy. Now, in Kenya, we see the complete opposite. What can you say that the Kenya government is doing that actually helps the welfare of the people? What are these welfare projects? Do we have any welfare projects?
Yeah, we do.
Like which ones?
Yeah. They're small.
The welfare projects are all over. I think almost half of the fiscal budget. The fiscal budget is divided into what goes to the county, the development, and now what remains, which usually is around 1.8 trillion. The recurrent budget, that is minus the county transfers. Half of that money is social kind of expenditure. So fine, I wanted to redefine the concept of transfer. Because transfer payment, we can look at it in two ways. We can talk about what actually goes direct without any variable addition. We can also have social expenditures, like what recently we had, the Kazi Mitaani. That's just a transfer. You can't talk about any production in the process. So if you look at it from a broad definition of transfer payments, then you'll see that the current expenditure in our country, half of the current budget.
Dr. Njaramba, I have to ask you, are these constantly budgeted for? Because if you're giving Kazi Mtani as an example, as in terms of what happened, it happened as a response to the pandemic, right? But are there consistently budgeted welfare programs in this country that we can see actually play out from beginning to end, like we see in other countries? If somebody is out of a job, for example, they can be put on something called unemployment, and I'm looking specifically at the continental US. They can be put on something called unemployment. You will be able to be fed by the government if you're out of a job. And this is not something that happens as a result of the pandemic. We saw them paying welfare checks in the US because of COVID-19, but that is something that happened as a result of COVID. But you can look on the other side and look at their social protectionist programs, whereby the welfare system is bolstered year in, year out by the budget because it has been factored in, taken into consideration. Does that exist here?
Now, the question of planning, that I think we need to get deeper to it, whether some of the activities are put in the budget on the outset. But the response to pandemic, that is true. But the question is it the optimal? Is it the optimal action given the situation? Like, for example, if we are talking about the Kazi Mitaani, and of course, the expenditure of 6-point-something billion, which again is borrowed money. Given such a situation, was it the best or the optimal activity that money could have been used? Then we have other scenario like if we are talking about a period, a normal period before pandemic. Remember, we have had even what we are calling a stimulus project. Not even forgetting that stimulus is something that actually needs to be sustainable in the long run. But you'll find that a number of stimulus are projects that just exhaust their finance at that particular time, and once it's done, it is gone. It's not an investment.
You know that.
So in this,
sorry, just as you complete that, I'm tempted to say you're thinking very much like an economist, and I'm also seeing that as from a civil society perspective, we may be part of the drivers of the expansionist budget because we've been advocating for more social protection, money to the elderly, to vulnerable groups. You know, we've been advocating for more social spending. Kenya doesn't spend enough on health, for instance. Kenya doesn't spend enough on agriculture. Of course, we want to get rid of the corruption. But from what you're saying, are you saying social spending is inimical to growth? And are we then saying that we need to go back to spending everything on investment that is you know, economically is going to give economic returns? What happens to the 80% of Kenyans who aren't in the formal economy and the households that depend on them that need some sort of protection? How do you balance that?
Of course, you're saying I'm thinking like an economist. I'm one. Then again, there is one thing I want to say, and I want to make it clear. The social protection is a very good thing in an economy. You need to protect the vulnerable groups. And we have to define who are the vulnerables. Now, once you talk about agriculture, it is an activity for most of the vulnerable groups. We can talk about the sick, we can talk about the elderly, and of course they need to be protected. We also need to talk about unemployed. They need to be protected. But do they need to be protected in a what we may call transitory activities? Activity that once that expenditure is done, then they are back to where we started. So that's the question. It's not an issue that social protection is a bad thing. But why should you do a social protection to youth? Fine, maybe to caution against a pandemic, that's okay. Mm-hmm. But we need a sustainable. We talk about, you've started by talking about if you fail to plan today, then tomorrow may not be part of you. I'm trying to remember the exact wording, but I think that's what I got.
Proverb, yes.
So now the issue is that we are more concerned about tomorrow, but today. So the moment you are talking about supplying a fish to youth, then the moment tomorrow you will be in a position not to provide. So now, where would the youth be? And that's why that's where we are in Kenya. That we have spent a lot of money in an area probably to cushion, or we've been in cushioning all through. We've forgotten that we need to have sustainable programs. That's my concern. And I don't have any issue with social protection. But I have an issue when it is taking almost the total revenue the Republic has.
Doctor, for the longest time, there has been social protection on paper and in practice, well, in a smattering way for the elderly. Monies that are given to the elderly periodically. Now, there may be issues around it, but it exists. And there are people who actually receive the money. Now, where you are right, and I agree with you, is structuring it so that it's something that will happen. But against a backdrop of a situation where people who are owed pensions and are due to them cannot even access something they've already paid for, because this is part of the social protection that we're talking about, then it means that the problem is perhaps is greater than what we are actually saying. Because the Greeks had a problem with paying taxes. Tax evasion was a national pastime, okay? Now, in this country, we pay taxes. We pay taxes to the point where you're not even sure half the time what it is you're paying, but we pay taxes. Now, there may be people who avoid paying taxes, but the government is able to collect taxes from their people at the national level. A problem arises not in only tax collection, but in revenue creation. One, within the devolved systems of government that we have, and again, policies that ensure that there is a revamped revenue increase within the national economy. And I think this is what you're talking about, having something that is sustainable. Because if we are not producing sufficient revenue at whatever levels of government, then the issue of also revenue collection or taxation becomes a bit of a problem. Now, our similarity with Greece, I think, begins and ends at that particular point in this sense. The Greeks then had the advantage of the Europeans, their neighbors, coming up with 320 billion euros to sort of to bail them out. Okay? As we speak, they probably pay something like 40 to 50 billion euros. But they're still trying to sort out. Now, we don't have European neighbors or African neighbors who can come together and cobble up an amount to sort of help us, because most of our neighbors
are in the same boat.
No, worse.
Maybe out of the boat, in the water. Dr. Njaramba, we wanted to take
the neighbors are not worse. They are doing far better.
Okay, well, maybe we can look at that in more detail.
Well, let me not make the question, remake it. Let me just say, you see, if you look at the ecosystem that Greece thrived in or existed in, was within the European Union. Now, the European Union has a European Union Bank. It has an economy that is moving towards being unified. It has a currency that unifies that particular union even further. So all I'm saying is that it has a support system. It had a support system that works. We're in the process of trying to create one and cobble up a support system that would actually work for us, and we can see how this goes. But the problem that Greece has was its own. Okay? Tax evasion was a national pastime in that particular country at that particular point, and it got them to that position. When it came to the productivity of their goods, they were not competitive within the EU. So it meant that basic things that economists understand, like inflation, just kept doing their thing and going higher and higher and higher. Our productivity doesn't have that same problem. In fact, if anything, our business and industries are growing and output grows within the region. We have high costs of production and other related factors that perhaps don't make us as competitive as we could be, but our situation is not completely untenable. It requires a little tweaking in my mind, and it can actually work, because we don't have what I would refer to as identical problems that the Greeks have. We have similarities, but not identical.
So similarities in terms of uncompetitiveness, not to the scale of Greece, but we do have a problem in terms of the uncompetitiveness of our local
the cost of
industry.
Production and industries, yes.
And then we have unsustainable social spending. I'm having a problem with that, even saying it, because we want more social spending, but unsustainable fiscal strategy is what Dr. Njaramba has told us. So, Dr. Njaramba, we are saying we're not exactly where Greece was, but we're not in a good position. The IMF has now come in. Is this the pill that we need? Is this going to help get us back on track?
Before we get there, Wanjru, Greece had defaulted on their loan.
We have not defaulted.
We have not defaulted on our loan as yet.
But big payments are coming up this year.
China's expecting their money start July. There was some reprieve that was given to the country for about 6 months, and said, okay, this seems to be a bit of a problem. We can wait. Guess what? 6 months is almost over. About 30 days left before those payments are going to start being due, right? So we haven't defaulted, but are we hurtling in? Is Kenya hurtling in that direction, Dr. Njaramba, that things could get to a spot? Because if I see it, and taking that into consideration, that where Kenya could then be in that Greek situation is in the matter of default. That what got them into an exacerbated situation was the defaulting of the facilities that they had across board, and it was just not feasible at all.
Yeah, thank you. I want to say that there are some quotation. I think we need to go to some data that Kenya is a bit competitive and productive. I think that we need to go to the current statistics. But before we do that, there are two things I would want to add about the Greek conditions, and especially before it joined, became a member of EU. Now, one of it was that it was accused of having the wrong data. They were cooking, the commonly known cooking data. So some of the information that they had was not their actual position. Two is that somebody talked about that there was high protection of the domestic industries in Greece, but the protection was on the wrong side. It actually had a heavy, or what we may call a high-valued currency at that particular time. In fact, it was forced to devalue for it to manage to some of the interest rates to the level of EU, and to manage the issue of inflation, which was coming mainly because of that overvaluation of the currency. In order to form or to be, there were some conditions given by the central bank, that is the European Central Bank, and it was mainly to force the devaluation of the Greece currency. So those two conditions, the issue of data, the issue of overvaluation, fine, they may. I've seen that you're separating the words similar and identical. Actually, the difference is so thin. But you may find that we are in a similar situation once we come to Kenya. The data, I doubt even you can trust the data currently coming from our government, mainly the Kenya National Bureau of Statistics.
You cannot. Sorry, Doctor. You're saying that you cannot trust the data that's coming from.
Right. Remember, it's not official, but for myself, I have reservations. In fact, the fact that Kenya GDP is 10 point something trillion, I highly doubt.
Why do you doubt, Dr.
Now, don't forget, I think 3 or 4 years back, we did a rebasing, which actually upgraded the Kenya economy GDP by around 30%. So to me, I still remove 30% of it. So that you may say that if we are talking about 10 trillion, the size of GDP, I will consider it below 7. Because that rebasing, if I give an example, a situation where a farmer is producing just 10 liters of milk, and that a liter of milk is going for 100 Kenya shillings, then we'll be talking about that the farmer is worth 1,000 per day. So if the price of milk increased to 200, so are we okay to say that then the farmer is worth 200? 2,000, sorry, 2,000 per day. In real sense, it is not. In nominal terms, that could be true. But in real value, because the price does not only increase on the milk, it increases even on the input and all other commodities. So in terms of real value, then I may say that Kenya may not be 10 trillion worth of GDP.
Dr. Since we're talking statistics and figures, let me ask the question. What would you say is our government deficit?
Yeah, you know that one is official because it is data available.
Yes.
I think it should be around 9 now. Around 9 trillion.
Okay,
Actually,
and what is our public debt, for
of
instance? There's a reason why I'm asking this. I'm going somewhere with it. What's our public debt?
No, the initial question was there.
Yes, you answered it well. The deficit, you said, is 3%. Okay, let me just ask the question I want to ask.
9%.
9%.
9 trillion.
9 trillion.
You didn't give it as a percentage of the
As a
GDP
trillion,
in terms of the total amount.
Yes. You see why I asked the question? You pointed out, it's you pointed me in the direction that I'm asking this question. The Greeks entered the EU under false pretenses. They cooked their figures to meet the basic demands, 3%
Right.
deficit, 60% of public debt, and so forth. And in 2004, they admitted as such that they had actually now. What I'm asking is, do we meet the threshold that would put us, if you look at IMF, World Bank structures and figures, are we at the point where we are actually heading towards insolvency as a government?
Even the figures available can answer that. Fine. Tell me an economy, a GDP that is 10 trillion. Of course, that's the figure we are given. Let me, we did the basing. If I did the refer so that we are able to compare with the former regimes, let me give it the 7 trillion, to be fair. 7 trillion. And the economy owes the external, let me not even consider the domestic debt, because that one is easily manageable. The main problem is foreign debt. It is now going to 6 trillion. That is an economy that owes outside that. This is similar to saying is an individual that is earning monthly, let's talk about 100,000 Kenya shillings. But this person is paying 95,000 Kenya shillings per month to the bank. then would you say that this person is not headed to insolvency?
And especially because that external borrowing can't be quantified in terms of the productivity of the investments. We can't trace the Eurobond. SGR is a de facto white elephant. It's not able to generate the revenue.
But
actually, if you go before you leave that point,
yes,
if you go that direction, we are now in more trouble. How would you pay a foreign debt? This 6 trillion. You can only pay by way of more export. You need to earn foreign currency. It's not like that. I heard at one point our president compared the situation in terms of debt, that of Kenya with the US and that of Japan. But you forget that these are 2 different currencies altogether. And then even the debt that they owe, like that one of Japan, which is over 200,000%, is a domestic debt. Remember the currency that you hold, the 1,000 Kenya note you hold, with yourself. It is actually an IOU, a note. The central bank credit or in its balance sheet is put as a liability. It owes you that value. So it is their own paper. So domestic currency and the domestic debt has never led any country into trouble. But foreign debt is the main issue, because how you repay, like the debt that we are acquiring from IMF, you cannot pay that debt by taxing. You cannot. You can only pay that debt by exporting.
But I agree with you completely. But if you look at that debt and the commercial debts that we also acquired from other foreign agencies, there is the issue of the cost of that debt. The commercial loans are far more expensive than the IMF loan. And that cost is what perhaps could ease or make untenable the ability to pay.
Yeah, I agree with you. I agree with you. The ability to pay, of course, anytime you don't to borrow a loan, you must consider the ability to pay. And the ability to pay, of course, is related to how much you are earning. So for you to go and borrow from IMF, and this amount of money plus others, of course, borrowed, has to be financed probably in every financial year. So the question is how much you are earning, or the investment that you're going to do, the much they give back. In terms of foreign currency, not domestic currency, because at the end of the day, you would not require domestic currency. If domestic currency was an issue, or if, like, for example, I've heard people talk about taxing domestic market in order to pay foreign debt. I was wondering then, why don't you just go task the dealer here to print the entire money and pay? But you cannot. In fact, the moment you close the border, including TZ, Uganda, you cannot even use Kenya shillings. You need to convert. The Kenya shilling is inconvertible. So in that case, the sustainability, the concept of capacity to pay may not be in a question in the event that what the country is generating, whether the loan were expensive, if the economy was generating enough. But the question should be, why do we even need this foreign currency? The concept is that of uncompetitiveness of our goods, both domestic and even
international.
Back to the core of the
That's
problem.
something to sink into, and I think also a place to kind of wrap things up this morning. Dr. Njaramba, thank you very much for joining us this morning. Really insightful to think on some of these things and to then ask ourselves questions that we can then use for further conversation. Thank you very much for being part of the Situation Room this morning. Asante Sana.